Good afternoon, everyone. Crypto Hondo here, Howard Greenberg from Prosper Trading Academy with my man, the legend, Charlie Moon, in the Dips to Rips podcast. How we doing today, Charlie?
All right, man. A lot of stuff to digest. We have a lot to talk about today, and it's going to be a wild one. Coming off of Nvidia earnings, kind of crap in the bed, but this is not a surprise on Nvidia. The one of the things that you and I talk about a lot is kind of the lack of like interest in the market and seeing, a lot of dead periods, right? You
Sure.
said sometimes there's days where you're looking at crypto, you go through all these coins and you're like, there's nothing for me to do.
Today was sort of that. Nothing moved more than like 1 or 2% all day.
Yeah.
You can't make a lot of money if everything goes completely sideways.
Yeah, and equities have been kind of like that. But dynamically with Nvidia being slightly down, the numbers were a big miss. Just want to inform people. But they kind of pre-warned about this. Their revenue was a big miss, but the revenue was a miss based on what they pre-warned, which is based off their gaming revenue. The gaming revenue, meaning gaming components, were down 44% quarter over quarter. And they're shifting the blame towards gaming, but it's not just gaming, right? It's gaming and crypto. A lot of these,
Mining. Yeah, it's
yeah,
mining.
right. And a lot of obviously the lack of interest and realistically a lack of mining that's been taking place because of costs. Um, Certainly hit a powerhouse stock like Nvidia in after hours. Nvidia's initial reaction was pretty violent. It dropped down to 162.47, rebounded all the way back to unch, and now is down around $4. So I guess let's kind of lead into that, Howard, as in where do you see the state of, I guess, in the near term crypto, especially because Bitcoin at this ever so present 22,000 mark. By the way, Howard had pointed this level out several times over on our podcast, but more prominently recently. So, what do you think about that little kind of hood, that ceiling that's coming in on Bitcoin at around this 22K range, and what the fallout could possibly be going forward in the near term?
Sure. I mean, I think we got a couple of things going on. We're filming this on Wednesday. Tomorrow we have some big numbers coming out, right? GDP, and then Powell speaking on Friday. My view is that we are sort of at the top of range right now, unless we just, but that's only if anything changes. I think
Right.
tomorrow people are expecting GDP to be bad. It's going to be bad.
Yeah, it's
And
projected negative 0.9%. So
right.
that'd be
So,
the third
so
quarter.
I do think this is one of the few times that I do think that actually is baked in. I think people, I think the trader has been more prepared that we're in recession than the market, than
But
the
Howard, the
Fed
White
is.
House, remember they had to redefine what a recession
And
was.
they're going to redefine it. I'm sure again
Yeah,
on Friday,
because
my
if two
friend.
negative
Listen,
GDPs
I'm
doesn't
not
define a
defending.
recession.
I'm not defending them in any way. But you know what I mean is I do think that if that's the case when Powell speaks, I think we might take off on Friday again. I think if he reaffirms, 75, 50 to 75 basis points, I do think we see the market take a nice little jump up. And in crypto, I'm talking about, we're just going to replace what we dropped the last week. You guys didn't have, you had the drop on Friday that we both saw, but we dropped Tuesday, Wednesday, Thursday last week also.
Yeah, we're
So,
down a decent amount in the markets. So let's really quick on the GDP. So
yeah.
as I was saying, if two negative GDPs back to back doesn't signal recession, what does three? But it's almost as if the consensus has teed it up for um for this to be a beat, because it's coming in at negative 0.9. So if we come in at, let's say, negative 0.1, the markets will be like, oh, it's not as worse as expected. It's not as bad as expected. We'll be okay. And then, with Powell, it's going on 2 years plus. But let's be honest with you, the vast majority since, I don't know, going back to even probably before Bernanke, but uh, the vast majority of the times when FOMC chairs speak, they're usually very dovish, and the markets tend to like what they say. But I will say this: if Powell points to September being a 75 basis point hike, I think it's going to be a bad reaction. I think it's going to be, I don't want to say it's going to be a heavy duty sell off, but it'll be similar to what we saw the other day where we're down 2%. And it'll actually shake up the markets because it'll be a surprise, right? Everybody's like, oh, Powell speaking, we're just going to buy. That's just how it's going to work out. Now, when we look at the future Fed fund CME group rate, basically the traders on the floor could trade this and kind of gauge or bet which way the Fed is going to lean towards. With the recent market weakness earlier this week and late last week, we were at 60-40, 60%. The market was anticipating only a 50 basis point hike, 40% of 75 basis points. So I'm going to pull this up really quickly into the picture here. As of right now, we are pricing in currently 37.5% for a 50 basis point hike and 62.5. You could see exactly 1 week ago we were at 60-40. Now the market has been kind of teetering back and forth because a month ago we are at 53.40 with the possibility of there's a small chance that they're pricing in a full 100 basis point hike, but right now it seems that the market is kind of pricing in the 75 basis point hike. So when Powell speaks, and if he kind of doesn't guide towards this, but guides towards this, you are 100% correct, Howard. I think we're going to go launching. It could even be a point where maybe the market is expecting that 75 basis point hike. And, you know, what you had said about pricing in, you know, the thoughts of recession and kind of, informed traders just saying, well, that's duh, look at gas, it's still expensive. And, the last time I went to the store, there weren't as many sales and milk is still this price. So you're right. We could absolutely see that pricing, but I also think that is not particularly 100% going to be the case here, because if it's uttered out of his words and that's the guidance, the market may have to readjust, move us lower before we start to rally. We're at this teetering point where we're trying to rally back after an extended pullback here. We're not that far off the highs in the Qs, but I want to say about 5 days ago, 6 days ago, we were at 334s, and today we hit a low of 312. So definitely seeing a little bit of an extended pullback in the overall markets. But, you bounce 26% off the lows and you come off like 6-7% off the highs. It's not really that big of a deal. So we'll have to wait and see. Now, I'm just curious, do you think that any of the kind of the temperament on Bitcoin that's been taking place, this little bit of resistance, is technical, or do you think that it may be some of that news that you had discussed prior to this about Ethereum and your thoughts on Ethereum being kind of that cause and effect? Do you think that Ethereum and the merge news, and I want you to break that down for everybody that what the, I guess, the thesis or the feeling is. Do you think that's what's kind of hooding, the rally in crypto right now, especially in Bitcoin?
I think a few things are going on. Tornado Cash. I don't think that had happened before we were here last week. The OFAC shut down a mixer called Tornado Cash and arrested the developer. That really sent shockwaves across the Ethereum ecosystem and crypto in general, because it had widely been considered that code was neutral and code was free speech.
Okay, so why were they arrested? Can you explain that really quick?
So Tornado Cash was a place where people can go to basically anonymize. It's what's called an anonymizing site. It allowed you to take your coins and you could break the on-chain data from them and basically clean your coins. But that's one use of it. Another use for it is like a celebrity like Vitalik Buterin, when he donated to the Ukrainian causes, didn't want to be publicly known for that, maybe partly because he's Russian by background, or just because he's a very political figure already. maybe doesn't want that to be part of the Ethereum discussion. He came out and said, hey, when I did that, I used Tornado Cash because I wanted to be anonymous. So there are legitimate reasons for it, but it was really seen and really proven to be where most of the hacks have been laundering their money, especially North Korea. And OFAC, which is part of US Treasury, put them on their sanction list. It's the first time that a non-entity, so not a person or a corporation, was put on this list because it's code. The wallets are attached to a smart contract. The ability for those developers to change the code or interact with it was thrown away years ago in 2020. So they destroyed those keys. So they have no access to that code. That code runs forever. It will always run. So that was part of it there, and what's come from that is a real debate, with Ethereum and the merge. There was already a group of miners that didn't like that they're going to proof of stake. So now they're talking about forking and doing a proof of work version. I don't give much credence to that having any life to it afterwards. That's a money grab, in my opinion, completely by Justin Sun and David Gus, that are just looking to make money and people just looking to make money, out there. But what we are seeing is, there's been a lot of discussion throughout the Ethereum community and developers about how they're going to proceed in the future, because right now miners get to choose what they do and don't do, and there's nothing that the blockchain itself can do about that. So already, there are miners, Ethermine being one of them, that are not processing transactions that come from those OFAC wallets. That is a choice of theirs, but all the other nodes are, so there's not really an issue for, the transactions are going to happen and it's at their own discretion. Right. What they're talking about, and there's nothing Ethereum can really do to that, the way it's set up now. Under the proof of stake, which it's going to be changing to under the merge, there are each person that is staking and saying that they're going to now validate transactions has the ability for their stake to be taken away. And Vitalik came out and said, hey, if Coinbase, which is one of the largest staking pools in the world, and basically Coinbase, Lido, Finance, Kraken, those three alone, I believe, were like 66% of the amount of Ethereum staked. So they're worried about what if those three entities say they're going to do that, then there would be a consensus and, it would actually censor the Ethereum blockchain. So a lot of talk about taking away those stakes, those coins, and burning them if that's the case, anyone that censors the blockchain. So there's a lot of controversy out there right now. That's why for me, the price is sitting at 1681 here. As you remember, a few weeks ago, we bought at 1680 and sold at 2000 because, that was our trade. And I then said that there was a chance we might go up to 2200 here before the merge. But quite honestly, one of the big reasons where we're at is, quite frankly, because of all of a sudden, for the first time in a long time, there's controversy around this, improvement to the protocol. And is it really an improvement? So,
this Tornado Cash thing is pretty interesting because part of like the maxi, point of argument in using crypto is that you'll always know where it's coming from because of the blockchain data. You can't hide it. You can't hide where it's coming from or where it's going to. And the fact that you're able to wash it, think about all the hack coins that are out there and the missing, money that's out there that's been taken, that potentially could have already been washed out through this. And so I guess that the question here is, what are, because I guess there's some pros to having Tornado Cash around, but the cons seem pretty significant in this situation. So if this fallout, so to speak, in relation from this information, like, okay, so I guess number one is, I'm not sure, what are they charged with? Are they charged with money laundering?
So, well, again, they haven't. The person who's been arrested in the Netherlands hasn't even been charged yet. They have just been detained. So we have no information about that. So the part about the developer is, no one's been able to talk to him, including lawyers yet. He has just been detained. And, so that part, and I agree with what you were saying. There needs to be some, and we've seen this in the courts play out. The whole reason that Tor is still available, right, which is basically the dark web, is that judges here in the US decided that its value was better than its deterrence. So in other words, while it did provide a place for something like Hydra or like Silk Road, it also provided a way for people, dissidents in many countries around the world. It was their access point to the outside world, whether that be Venezuela, Palestine, Cuba, Russia, and other places, so that the pros outweighed the negatives or the cons. What you really find with Tornado Cash is two things, in my personal opinion. One is they did absolutely nothing to try to put any types of checks and balances in place. Right. And there are some things you can do to make it at least a little bit more difficult, which is what sort of has happened. And what we're seeing across DeFi right now, where companies like Uniswap are deciding to take their front end, the user interface, and put that software there to protect, against that. So those wallets can't be done. But if you're a coder, you can still go directly to the smart contract and you can interact with the smart contract directly. But at least they're putting steps and balances in place to try to measure that and try to keep it at a minimum. Tornado Cash did not do any of that,
Wait, so who wanted this guy arrested?
We don't know yet. We don't know if it's the EU or Belgium or under the US asking for him. There's been no information that's come out.
It's very shadowy and
almost, and we don't know scary. Because again, and again, I don't want to badmouth this gentleman, but they didn't, to our knowledge, they haven't gone after the other developers. So was this person maybe doing something wrong, like showing people how to use it, to promote money laundering? Was he advertising or putting on darknet? And that's what they shut down Hydra from, is they were able to prove that they went onto the darknet and said, hey, we will launder your money.
Yeah.
You know what I mean? So was he doing something like that? I have no idea. I don't even know how to get onto the dark net.
Wait, so was this guy the top exec that was arrested, or
he's
was
not
he
an exec? So he's one of the developers, though.
He's just a dev.
Yeah, they were all just devs. Remember, there is no Tornado Cash company. So that's what we're saying, is this wasn't a company they went after. These were individuals.
Right. So that what you just pointed out made a lot of sense, that it has to be something directly tied to him that they saw and the others didn't know about, which, like I said, money is a motivation, and, it could even make the most innocent of people do something crazy. Like, for example, if you had the ability to steal $700 million, would you? Some people would say no. A lot of people would sit there and scratch their head and think about it.
Yeah. How long till the officials figure out that I did it? How far can I go hide? I guess. I don't know. You'd have to ask Do Kwon.
Yeah, I was just gonna say it's one of those guys. It's the same thing. In Malaysia, if you remember, what is it called? Something like Bank One, where they had that huge deal with the Saudis. The Goldman Sachs had backed it. Goldman Sachs ended up losing like $1.8 billion from this. This guy basically funneled $700 million into a shadow account. And this guy went on just like a crazy spending spree. Like, he got pinched because he was a dumbass about his money. He was going to Vegas. He was gambling crazy. He was buying out like nightclubs in Vegas. He was buying out and paying for everybody's tab, like table service. He's like, okay, well, if you have a table, I'm going to buy you 5 bottles of champagne and 5 bottles of whatever you want. Don't worry about it. And there was a story that
the guys we got to hang out with, Charlie.
Yeah, no, this guy, there's a story that this guy.
I saw it. Yeah.
Yeah. Well, if you walk right by his table, he would just hand you money. You didn't even have to know him. You just have to be in his vicinity. How about that? Someone just walks up to you and just rains money.
He was, like you said, this was a guy who was making like $20 million a year before he started stealing this stuff.
Yeah, I gotta be honest with you. If this guy decided to just give me free money like that, I may or may not walk past him like 15 to 25 times.
Change his shirt, go back like I used to do at Halloween.
Whatever, man. Just be my boy. Too drunk enough to recognize it, anyways. Yeah, so that's an interesting kind of point, and I know that there's some concerns. There's some concerns on my end about the markets as well. it's for me, and I'm pretty sure you're kind of taking that same approach. I'm taking a wait and see approach, whether we've hit the bottom, which I do think we have, or we're going to revisit those bottoms and break it, which is certainly possible. We just never know with the markets. We just never know when high volume comes in, how it's going to be pressed and how it's going to be traded. And it's kind of the same thing too, right? Because we always talk about the short squeeze, but it's the same thing. There's buy side squeezes as well to the downside. I mean, you know that more than anything, not
Yeah,
from a
for us,
personal standpoint, but from looking at your markets and seeing those, leveraged liquidations and how fast things could go down. It's similar to the markets as well. So, Howard, got to ask you a question, man. Did you buy some APE yet?
no, I didn't, because you cocked me out of it. Thank God.
Yeah, no.
Um,
This whole situation with APE and what it's doing to the retail public. Now, I know that you look into it every once in a while, but have you been keeping up with like the chat boards and like the Reddits
I've
and
been trying to. I got some questions for you, if you don't mind. I
yeah.
mean,
Fire away, please.
because first of all, when did you guys start copying crypto? Because this looked like an airdrop. And I've
Kind
never
of what
seen.
it
I've been
was.
waiting for my Tesla airdrop for a long time, but Elon hasn't sent me anything yet. I check my accounts every day. So I don't quite understand where these shares sort of got created out of. And then are you looking at APE and AMC now? Like I've heard people talk about, you got to add the two together now would be the market cap, right?
Yeah,
Because they're both for AMC. It's not a different company.
so what you said is correct here. Let's kind of break it down. Obviously, it is somewhat of an airdrop. It's known as a special dividend. In all respect, it's basically a split of the stock price with a different ticker. Um, with crypto airdrops, like for example, with NFTs, they could just create code, create these NFTs, create a special amount, and then just send it out to you. The equity value is based on market participants and what they seek value in that asset itself, just like with any NFT, right? Because when you look behind, CryptoPunks or anything else, where's the nominal value? The nominal value is just what the market determines that value to be. So, with AMC and APE, it's a little bit different. APE, I believe, opened somewhere around $6 to $7 on Monday. AMC had traded at 18 and then opened at 11. Now, I got to be honest with you, I didn't actually know that it was going to be a split like that. I kind of was thinking in the line of what you were. I actually thought they had shares outstanding and they were distributing shares outstanding that wasn't available in the actual market flow. So in a sense, I felt like they kind of were coming up with it from thin air. And then, of course, when I saw AMC on Monday, I was like, oh, but it made sense that it was offset with the APE. Now, a funny thing here, which at first kind of sounded off, but actually sounds right now, meaning it sounds a lot more, it makes a lot more sense, is that Stephen Cohen from Point 72, you familiar with him?
Mets.
Yep, the guy that owns the Mets, the very vocal owner of the Mets.
Yeah.
He's actually long APE right now, and he's shorted AMC. He said in all respects, they should be the same price. And I was like, but it's he's totally right. They're known as AMC preferred equities, but again, if they're coming as a derivative from the actual underlying itself, which is AMC, it's the same damn thing with a different name, right? It's like,
That's what I thought. I mean, that's why I wanted to ask you, because if anything, to me, the preferred equity one, would be worth more of anything, maybe, than the regular one.
I like the name better.
Yeah. But yeah, I think that's surprised, and that's where, Charlie, I think that we still have problems with transparency in all markets. We talk about it in crypto being a problem, where sometimes, you got to do a lot of research to figure out what's going on. Again, I just dabble in the meme coin world. And as you know, then I ask you 8,000 questions. And, and I was confused as could be on it, leading into it and then after it. And people are still confused. And You get a lot of false information. So I just want to point out to people, make sure that you do listen to an expert, someone that knows what they're talking about, like Charlie, not just somebody on Reddit, Facebook, TikTok, because, they gave a lot of wrong information when it came to that.
Well, remember, again, it's if we talk about society in a scale of popularity, the outcome is that a lot of the websites that you may visit to talk about, whether it's Facebook, whether it's Reddit, whether it's StockTwit, for example, which is a social media platform designed for traders and investors, their algorithms are designed to find popular or to showcase popular posts or popular topics first. It's why when you go on Twitter, in your upper right hand corner, you see hashtags that are trending or topics that are trending and that are being talked about on their social media world. And again, people come into these topics with a certain feel or a basic knowledge of what they already know, or a skewed idea of how things should be. And when they see something that agrees with them, of course they're going to be talking about it and agreeing with it and showcasing it, or it helps reinforce what their thought process of the situation is, and that doesn't necessarily make it correct. And the problem with that is this is what's being presented out there, because these are the popular topics, these are the proper popular chats and popular tweets and discussions. Truth be told, I like with the brokers, there wasn't really that much like of a breakdown. There wasn't anything with the GME dividend. The company is pretty straightforward in trying to explain it, but a lot I think GME and AMC didn't explain how it was going to happen, and if they did, I totally just missed it. But I have a guy in my room who's like a total meme loyalist. He's a younger kid. He's done exceptionally well. I mean, he rips it into GME when the time is right. He's extremely patient with it. He usually makes $5,000 to like $7,000, and that's all he wants to do. He doesn't really. He'll day trade, and make a couple $100 here and there on other stocks that we discussed. But his primary focus is on these memes. He knows all about it. He looks for, dates of deliveries and when short interest starts to ramp up, when shares are available, they're no longer available because of borrows. He's always on top of it. And even he was a little confused about how the GME dividend was going to work and this AMC dividend was going to work. But now we know. Now we know that it was basically just a stock split. And it was really just a publicized and glorified marketing aspect to draw interest into these stocks, because that's what keeps these stocks afloat and performing well. And when they perform well, guys like AA and Ryan Cohen, or I should say, AA and RC, the
Right.
CEOs of the respective companies for AMC and GME, that's how they're going to get paid out. They get paid based on company performance, bottom line numbers, and keeping shareholders happy. It's all part of their jobs, guys. And it's in their vested interest as well, because if you own 50 million shares, 10 million shares of something, every dollar ticks up. That's 10, $15 million you're making. And if it's going down, that's 10, $15 million you're losing. And because of that aspect, well, it's in their best interest, obviously, from a personal standpoint, to see these stocks perform well. So it's partly the broker, partly the company, partly like kind of the public like nonsense that goes on. And a lot of, for me, uninformed traders that believe that they're informed, always using social media, because that's what social media is. It's soapbox, it's pound your chest, it's listen to me, I'm right, you're wrong type of attitude. And it just kind of leads to this just madness that centers around this market every day.
Right. No, without a doubt, Charlie. I mean, that's, like I said, I pay attention to this stuff, and especially I was looking at that AMC APE, and man, just trying to get information, like you're saying, was really hard to decipher what, you and what seems to be happening too is, and I point out a little bit of the difference in crypto is where there is such a big use by the Discord channels of the different protocols,
Yeah.
developers and stuff, where you can interact directly with those people. You know, disseminating information on Twitter is a really lousy way to do it. And that's how AA sort of does stuff, right?
Oh, all on Twitter,
You
brother.
know what I mean? Is that, and it's hard. You get, innuendos, you don't get all the information. So
Right.
I will say that is one thing that I hope to see, some of these companies start to follow what crypto does and having these Discord channels. So if you have a question, being more customer service oriented at that level, at the protocol level, or at the corporation level,
Yeah.
I've called a couple of those investor lines over the years for things, and it's not the easiest to get information. They like to
No.
tell you they'll call you back, they'll call you back, they'll call you back, and then they don't really like to answer anything.
Yeah, and it I got to say this, you are probably one of the most diligent researchers for information. So I definitely know that you scoured along and was trying to figure out what the hell's going on with this ape thing. And my discussion was I didn't really like how the market was treating it, and I didn't like what was happening. And it just, obviously since AMC is dumped, it hit what I think 950.
Yeah, it
Let
was
me double
down.
check on that. 923's new 52-week lows. So I thought that there was a point where we could see people dumping ape to buy into AMC. And I also said there's a possibility that we'll see people dump AMC and buy it into ape. And it looks like the latter is happening right now, where people are unloading on AMC and shoveling it into ape. Ape has held up a lot better than AMC. Hell, it's held up better than freaking GME. I was in this GME long at like 35.18. I was really close. I think it tickled at 34.96 today, Howard. I was really close to dumping it. And then I started trading Tesla because Tesla started waking up. I'm like, it's going to make a move. So I started buying calls in Tesla for the room. And then like 10 minutes later, when I looked back, GME was like knocking on the door of like 34.20. I was like, oh my God. And then
Yeah.
eventually it started rolling and I just dumped it. So, I just felt like we should have seen demand in GME kind of convert from AMC, because that's usually that's sympathetic, but one usually leads the other, and it's GME leading AMC. And the ungodly weakness in AMC, with really now starting to be really strong weakness in GME, and now supportive strength in APE, I'm almost thinking that these participants are liquidating in other assets and starting to pummel it into APE, and trying to move it higher. I think you said APE has the option. Holy crap, they have options. I don't think any of the options have traded though.
No, they haven't yet. So yeah, so I saw that they already got them loaded up, ready to go. There was no data yet because I was like, how did they do that so quick? I'm like, I've seen ETFs not get, options for a month or something.
Yeah,
But it
that's
shows you
all
the
based on
interest.
market demand.
Oh yeah, oh yeah. It was funny. I meant to ask our boss there, Scott, because I heard Scaramucci use a line. He said he learned it at Goldman Sachs, which is feed the ducks. If the ducks want it, we'll give it to them. We'll trade
That's
whatever the hell, whatever you're willing to trade, we're willing to make you a market for it.
I think the fastest I've ever seen an option market for an asset is with Snow. And I think Coin
Yeah.
was second. Usually the
Niccolo in
time
there
frame
too.
is around 30 days.
That's what I thought, like a month. Yeah.
Yeah, about 4 weeks to 5 weeks. I think Snow had it within 3 days and Coin had it within four. I think
Yeah.
those were, two really hyped up IPOs recently.
Absolutely. The biggest they
Snow
were.
was nuts,
Yeah.
just for those that don't recall or remember, um, Coinbase initial IPO, because the IPO pricing is set by midnight the day before it goes to the market. It was at $45, I believe, $45 to $50 or $45 to $55
Yeah.
for their initial IPO. Coin the following morning opened at $381. It ended up being delayed for an hour and a half of when they normally or were expected to come online, because the institutions kept bidding up the price. At one point, I think it bid it up. It was bid up to like 430, 450, and then it came back down and opened at 380s, and then the rest is history. Drop back. And Snow was something very similar. Like Snow was like IPO debut at 65, or supposed to IPO at 65. Snow opened at 245.
Yeah.
I mean, it's just how it is with these
People want access, especially
Yeah.
since you can get in on them now through all of the different brokerages. You know, in the old days, you couldn't really get in on them. So now everybody just wants in, especially, I mean, look at the SPACs when they went crazy.
This is gonna be a random question, Howard, but how do you feel about a company like Plaid? Are you familiar with Plaid at all? You should be.
Which one?
Plaid, Plaid.
The payment service?
Yeah, fintech company.
Yeah. I mean, I don't know the differentiation between them and a PayPal. You know what I mean? As I don't know enough about Plaid's business model. I think that they're not. Are they customer based? Are they retail based? Do you
Both. What I've noticed with Plaid is that they're partnering with a lot of institutions.
Yeah, I thought they were more business to business.
I mean, I use Plaid on certain respects. Yeah, so like I just have to link it to my bank account. So I mean, PayPal is kind of similar to that as well. I don't think you can link a debit card to Plaid though. It's weird with these fintech companies because the reason why I bring this up is because remember IPOs all of a sudden haven't been really coming out, and the only ones that have come out are those Chinese ship pumpers that everybody's trying to get up, like the HKDs. But I mean that GTC one or whatever that one has been, or GCT, that one's been pretty good lately here. That one's been starting to come back. But the reason why I point out Plaid is because they've kind of delayed their IPO. And I believe that once they come out, they're gonna be the next hot ticket item coming out for IPO. Second behind them would be Instacart. Instacart is aggressively trying to bring out the IPO, and I think it's because their valuations are falling. So I think everybody's trying to cash in. It's like a cash grab. But Instacart went from being somewhat tepid into coming into the IPO market to all of a sudden the last 4 months really ramping it up. And I think that they're going to be coming out IPO sometime in Q3. I think that's what the plan is right now. So I actually like Instacart. I actually think that
it's DoorDash on steroids, man. These delivery services, they don't make money. Are they making money yet?
How much is DoorDash stock right now?
What was it at versus what it's at now?
Well, versus where it's at now is different. I mean, we can't price in.
Oh yeah, right now everything is so far. But I mean, you know what I mean? So that makes it hard.
Right, but Dash is $64. Let me see what they IPO'd at.
That's what I'm more sort of hinting at is where are they versus where they started.
They IPO'd at 182.
Yeah,
but those below their IPO price. Coin is
so that's what I mean is that one worries me. Plaid, I like Plaid. I just realized, and Plaid is or was where a lot of crypto exchanges were using for onboarding. So Plaid is where Binance, I know with my Binance.us, I had to go through Plaid to get onboarded. So they do the KYC AML for a lot of crypto companies.
Which gives them an edge on other fintech companies, especially if
it would give them because they already have the connections. They're going to already have connections, wallet capabilities, all that type of stuff.
Well, another thing is they're buddy with a lot of institutions, so that's actually an easy way for institutions to get
right because they're working with the banks already. They're already doing KYC.
Very much so, yeah. No, and so like that, but they're. I think at one point they were marking it at around an $85 billion valuation on a round of funding. Think about that, Howard. That's nuts. That means that even pre-IPO, they're valued more than PayPal was at their peak. So that was, that's why, like, with a tempered valuation at this point, like if Plaid decides to come out with an IPO, I could see the demand soaring for this name. And there's people that hate fintech stocks, but let's be honest with you. I mean, fintech is going to be a big part of our future, whether we like it or not. And it's already integrated in our daily lives.
It's going to be there one way or the other because if they don't
I don't carry fiat, do you?
And they're going to get bought out. You know what I mean? Is if PayPal can't revolutionize what they're trying to revolutionize, then they'll be part of Bank of America, or they'll be part of that because
You
they
know
have
who
those
I see as a
customers.
company that would buy out PayPal? Apple.
Yeah, I mean, yeah, I mean, there's a bunch of different. That would be tough because of the way that so far that Congress has not wanted those companies in finance.
No, none.
So,
No way. They don't want to. They don't want those companies getting that powerful. They're already as powerful as
that's
they can be.
that becomes too powerful. But that's interesting. You know, Plaid would definitely be an interesting play when it comes out.
In the long run, guys, if Plaid opens below 150 bucks, wait for it to rip down. And just like with Snow and Coin, once it finds a bottom, it'll start ripping up. And when it pumps 2x, 3x, and if you guys are still holding, I mean, that's just greed.
Yep, get out.
Yeah, I mean it's the same thing, guys. In Dash, like imagine you cash out, you bought in at let's say you bought in at 100 bucks, cash out at 257. Use that money now to buy it back in the 60s and wait for it to get back to 100, 150 perhaps when this market gets crazy and to work its way higher. Now, the funny thing with Dash is that I actually, you know, I've talked about it. I actually love Dash. I think that they're such a so Howard, one thing you got to realize with me and certain companies that I love the dominating figures. I love people that just absolutely own shit in the markets, right? And whatever they're doing. And so, people don't realize that DoorDash has an incredible stronghold in this industry. Now, they're not making money, but hell, like CRM didn't make any money. CRM is losing money. I mean, we got their valuation at a crazy rate. Snow's not making money. We got them valued at a crazy rate. Companies don't need to make money for the stock to go up. What they need to do is that they can show progress to the point of being profitable, and then the stock price is going to go up. And that's a big thing. So, if we're talking in the long run, I love the price of Dash. If it got down to 30, it's even better, but I don't think it'll ever get down to 30. Now, people say, what about Uber Eats? Well, Uber Eats technically only owns like 20% of the market share. And that's with Uber Eats being partnered. I forget, is it with Postmates? One of those companies. That's how big of a stronghold DoorDash has. But in the same respect, DoorDash at some point has to showcase money. Otherwise, it'll never get back to that $250,
Yeah,
$250.
and here's the thing: as someone again that came from the restaurant industry, they're under intense hatred by restaurants who, at any point that a competitor that comes out that they think will give equal service, they're going to jump to it. The other thing is they used to charge about 22 to 24% fees to restaurants, and a lot of different jurisdictions found that to be predatory. So they were under regulatory scrutiny here in DC. They made them cut those rates. And once you cut those rates, it's hard to go back up, or restaurants don't want part of it.
Doesn't company do doesn't the restaurant that they partner with automatically do markups so that they're not affected?
Not allowed to. You have to match. You're supposed to have to match your menu price. They'll have that fee.
Crap to that.
Yeah.
Crap
Well,
to that.
they. I mean, I can tell you again, as someone who ran restaurants, we used to have to do some shady stuff just to get a markup on DoorDash. And it's still, you couldn't make it all up. You couldn't go up 20%. You tried to recoup some of it the best way as you can.
I think DoorDash also did a few things that that if orders don't get picked up or delivered, that they'll automatically buy them and pay for it, so it doesn't come out of the restaurant's end.
But the same way, if anybody complains about an order, they credit it and take it off.
And that's out of DoorDash's pocket.
And so many people, no, not a DoorDash. They take it out of the restaurant. You get
not anymore. Not anymore.
Oh, well,
that's
not
anymore. No, not anymore. I'm telling you right now, because two factors have come into play. Number one, that restaurants were saying, screw this, I'm going to stick with Uber Eats only. So because of the competitive nature, DoorDash actually had that's where the leak on DoorDash is right now in terms of revenue, but it's growing because sales are growing. And number two, if orders don't get picked up by their drivers, and if you don't know how the app works, guys, basically the driver gets alerted on an order and it shows you how much they're going to make, because when you put in your order, you have to put in that tip, right? And sometimes these orders are $2 and the driver has to drive like 6 miles round trip, and they're like, I'm not going to do that for $2. that order will sit there for an hour and a half or eventually get canceled out. So let's say it happened to McDonald's. McDonald's is not going to eat that cost. It's going to be on DoorDash, because DoorDash, by contract, guarantees that they're going to have a driver for that order. And because they don't have that driver available, nobody wants to take it. Who eats the bill? It's not the restaurant. It is going to be DoorDash in that sense. I also want to say the markup thing, it could be just based on online orders, but I just read about it recently because one of my friends who just got interviewed, she opened up a restaurant a year and a half ago, said that they actually have a markup for DoorDash. Now, that may be more of a local thing for you guys, but in Chicago,
No, it's a surcharge. You can't mark up your prices. I can guarantee you that. You can add a $5.99 service charge to it. And then what happens is you go to the back of the line for the consumer, because they show you the people that are part of DoorPass. So there's like 7 things they do to screw you over. They're predatory by nature, and I hate them as a company. So
DoorDash?
Yes, absolutely are. They've taken advantage of restaurants for years, and they're a scourge on society.
Scourge. Hold on. So tell me how you really feel about them.
I just did.
Well, when I look at these orders, right, I feel, for example, I'm looking at it right now versus online on their company website or the actual website of the restaurant. The prices are $2 higher. So I don't know why that would be. And like I said, I don't know if that's just a Chicago thing. I don't know if we're allowed to do it and nobody else is allowed to do it. But I mean, I'm literally looking at, like, for example, at Pita Inn, they have what's known as a lunch special or the combination feast. But that pricing for that order here, versus pickup as opposed to delivery, is very different. I'm actually looking at it right now. And I'm not trying to prove you wrong here. I'm just saying that, yeah. So Pita Inn on their website's at $14.90 here. I'll show this here. And again, I think this is more of a Chicago thing. But if you look, it says $14.99 for this combination feast. And if I look at DoorDash here, which is the same order right here, the mixed meats combination, it's at $17.25. So the markup and the offset for me has always been in this delivery. And I only reason why I said that I noticed this happening in the last year is because specifically I just saw the pricing of, or the cost of how much DoorDash was, as opposed to when we were doing it in COVID. Things were a lot cheaper and a lot more affordable. If I wanted a late night snack and I didn't want to go out because we've been drinking all night, one order used to be like $8 plus tip, and now that same order is, in partly it's inflation, but that same order is coming in at like $24 now, Howard. And again, my friend had mentioned that she actually said in an interview with I don't know if it was Eater, but that she has a specific markup. She's like, yeah, prices are marked up for DoorDash, but if you want to come in, you'll get them at menu prices. And I don't know if she was allowed to actually say that, but she says that was one of the ways that they got in the door with DoorDash and Uber Eats and etc., because they were able to afford that markup and it wasn't going to eat into their bottom line. But anyways, sorry, I don't want to keep talking about this and arguing about it. Any final thoughts, Howard, on where crypto is going to be by next week based on, let's say, if the GDP report comes in horrible and the markets get ugly? Do you think that we're going to drop below 15 in ETH and possibly work our way back towards that 1,000 range again?
I mean, I think we held pretty strong since Friday's drop. We haven't seen a bounce back, so we're in an in-between time as to whether or not we'll bottom out at. Now, I don't know if he changes his tune or whatever. No, I mean, all bets are off. You could go all the way down to 19 on Bitcoin. You could go down to 900 again on Ethereum, if news is bad enough.
900. Ethereum looks pretty good right now. It looks okay. We were talking about that bounce.
And I think crypto bounces on Friday up, not down, but you're saying
I love it
the other way.
Well, the only thing that I'm worried about is how the market's going to react to Powell if he does mention that the Fed is going to keep on with the higher rates. The vote last time at the last meeting was pretty unanimous. It's a safe bet. I don't want to say it's a sure bet, but it's a safe bet that the markets generally go up when Powell speaks. As far as I know, he is set to speak at 9 a.m. Eastern time, which means
10 a.m. Eastern, I think, 9 your time.
10 a.m. Eastern, 9 Central then. Okay. So if he's set to speak, yeah, it is. Sorry. Thank you. So if he's set to speak during the market and the market open, that is going to be crazy because at that same time, consumer sentiment report comes out. That's going to be really important. That's actually way higher than it was 2 months ago. 2 months ago, it was expected at 50.1. We're now expecting at 55.1. So that means that consumer confidence has rebounded. And so if they don't, that is also a potential signal for a recession, right? When consumers stop spending and start hoarding cash. So we'll have to wait and see tomorrow morning how the GDP report comes out. You said you felt that the GDP report could affect the crypto market and market direction.
No, I mean, as long as nothing's out of the ordinary, if it comes in somewhere around where they're predicting, then I think we see positive reaction in general. I don't think there's any surprise. Remember, crypto is not US based, it's worldwide. So, our GDP is not as big of a deal in crypto as it is to the equities market. I mean, it is important, but not as much.
Right.
It's going to be it's going to be the interest rates, borrowing money. The cost of money is going to be what matters.
The cost of money. Yeah. All right.
Yeah.
We'll see how the stock market reacts, guys. I mean, there's a slight chance that if we come in just even negative in general, that we'll be moving lower here. Because again, if we're trying to redefine what a recession is, I feel like if we come in, let's say negative 0.8, which is a beat, but jobless claims are now up 5%, week over week, that could be a signal, right? Because obviously people are working less and the GDP is negative, and these are all signs of the economy turning into a recession, and that could spark a little bit of a sell-off. But I think we should, hopefully the market's going to react very positively to this news and get us back on track to recent rallies. So Howard, if no other final thoughts, we'll do a little wrap up here. Just want to say, guys and gals, do appreciate you listening in. We see the view count is being steady, but we want it to go up. So do me a favor, guys and gals, please like, comment, and share. Get us in the algorithm. Let your friends know about what we're talking about, what we're dropping here. If there are topics, leave them down in the comments below, guys and gals. We look over the comments. We'll definitely respond. We'll be more than happy to actually call you out, give you a direct answer, especially if you're looking for trade ideas, etc., or you have questions on maybe the next new project that's coming out, or a project that you're looking at, or there's equities that you're looking at in terms of, maybe the next upcoming conference, etc. We'll see what we could do to help. With the great Howard Greenberg is the disciple of Chen Charles Moon saying bye until next time.
Have a great week, everybody.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.